All right, should be all good. Happy Sunday. Welcome in, everyone. How we all doing today? Get audio check. Alrighty. Hope you guys are all having a fantastic weekend. Ready to get back to business here. Now that you guys can hear me, how's everyone doing this Sunday? Williams, afternoon to you, sir. Amy, good afternoon to you. Chris, hello, sir. Joe, my man, glad to have you, brother. Really nice job on those NVIDIA swings. Looking at, let's see, NVIDIA. Yeah, so 140 target delivering real nicely. Really good call. Sorting out the stock side of things, Joe. Nicely done, brother. James, happy Sunday to you. Chris, hello, hello. Eslam, glad to be here. Awesome, guys. All right, let's go and get into it, into what we're looking at here for today. So as you guys know, it is non-farm payroll week. So with that in mind, you guys know that does adjust the operating hours that I am trading on NFP week. So just to recap, for those of you guys that are new, NFP weeks, Monday, Tuesday, looking to get paid, done for the week. I keep it very simple. So that's the plan for NFP week. And again, all NFP week means is when we have the non-farm payroll on Friday. So with that in mind, let's go ahead and get into what we're looking at here for today. Let's see where it's at. All right, good to go. All right, let's go and get right into it then. We'll start with the weekly chart here for US dollar. So we've really been banging around inside the range recently. One of the things that we've been covering for that has been just all the uncertainty, right? Middle East making a lot of threats to each other. And that's why, again, we saw, if we just drop down to the hourly chart real quick, huge, enormous gap higher on Wednesday afternoon after threats were being made between the Middle East. And again, that's just causing a lot of uncertainty in these markets right now. So saying that to say, you can see the US dollar. Let me put this tool here. I like this tool. We've just really been range bound. So going up to the weekly chart, what I'm watching now. Let's go zoom in here. Joe, thank you, sir. You're the reason for my success. Hey, brother, I just played a small role in it. You had to put in the hard work. You had to show up every day to the training sessions, to the live streams. All the work was put in on your end, brother. Just happy to be the one that helped facilitate the information, brother. Keep crushing it. Excited to see what you do with this, man. So as we were saying, weekly chart here. We have this weekly inversion fair value gap here. You've been watching that. You'll notice we traded up into it last week. We hit the lower quadrant, respecting it, and then slamming lower. We had that sell side as a target, delivered that. We did not get down to the 50% of this wick here. That's what I'll be looking at going forward. If we remain below this weekly inversion fair value gap here, I'm still looking for lower prices. So what I want to see is midpoint of the wick, and then this sell side here. Again, as long as we remain below this weekly inversion fair value gap. All right, dropping down into the daily chart here. It's really sloppy. We have this breaker I was watching last week, and then we just completely gapped above it and then slammed back down below it. So just really poor market structure in here. What I am watching, though, you see we did get back below that breaker, and we are trading into that range now. So still extend that through. It's still going to be a key level for me. Just because we gapped above it, now we're down below it, doesn't make it any less important. So I will be watching, make that this red. Watching this down close candle. Want to see if we can stay below it. So you see we opened on Friday, traded up to 50%, traded lower. I want to see if we can respect that and sell off into those discount targets. And that's what I'll be looking for this week on US dollar. Hourly chart. We have this large inefficiency here. Watch that, extend that through. If we remain below that, then my attention is on the sell side here, and then the other downside targets that I'm sharing with you guys. 50% of that weekly wick here, and then the sell side down here. Lotus, hello, Dylan. Thank you for your time. My pleasure. Glad to have you. All right, so that is US dollar. Before I get asked about euro, let me just drop into it. So euro looking for the same thing, looking for higher prices. So just reverse the analysis I gave for dollar, and that'll give you what you need for euro. And then for pound, watching this daily gap here, there's also a breaker, which we traded into. So bullish breaker on the daily chart with a fair value gap, watching that going forward. All right, from there, going right into the bond market here. Bonds, again, we've been touching on bonds this month. And if you notice, the reason it's been a little more difficult with the bond market is because we are still in a higher time frame consolidation profile. So if you look at the monthly chart here, right, we've just been range bound, right? So the market's just been in a tight range for all the respective bond triads. So with that in mind, we do have to be more nimble, do be more mindful. Scalping in this is absolutely much more difficult to do. So if you're ever scalping, or sorry, not scalping, I don't know why I said scalping, swing trading, sorry. If you're swing trading, a higher time frame consolidation profile, really difficult to do because you're just not as likely to get those range expansions. So it's much more of a scalper's market until we leave the current range that we're trading in. So looking at the weekly chart, here we see the market retracing into this weekly fair value gap here. That's going to be a key level for me going forward. So weekly chart here, using, yeah, this fair value gap here, you'll see we traded right up to the midpoint, closed right there. And then let me just mark them out for all of them. All right, so absolutely crucial level going forward is going to be this weekly fair value gap. If we stay below that, we're bearish. If we get above it, that does change things. And then all that means is we just stay inside this horrible range that we've been in for most of the year. So that's what I'm watching on bonds. Dropping down into our daily chart here. So we have been bearish, looking for lower prices, or at least I have rather. And what I've been watching is the breaker here. So extending this breaker here, I'm going to take off that weekly gap here. We'll just use this entire range here. So we're watching this breaker. As long as you remain below it, I'm bearish. If we get above it, I'm neutral. Simply because then they leave equal lows here. And if we get all the way up through the breaker, it's just going to mean we're just seeing more sloppy market structure. So I ideally don't want to see us even get through that breaker. So I will be watching that key level here going forward. Kevin, my man, happy Sunday to you, brother. My absolute pleasure, Kevin. Excited to see what you do with this, man. I know where we started back, what was it, 2022? So a few years ago, man. I remember where we started back in high strike. So a long way since then, brother. All right, so bearish breaker, that's what we're watching here. I did like how they left equal lows. I do believe they will revisit that, but as of right now, we're inside this key breaker level. We'll have to see how we trade there going forward. Alrighty, now to get into index futures. All right, we'll start with, we'll just keep them both up. That works for me. So S&P, we've been watching this weekly inversion fair value gap here. We've been monitoring that closely last couple weeks. We are still above it, so my bias is still bullish. I'm not trying to call a top in this market. If the market's going to top out, that's fine. It'll show us, and then we'll work with that information. But trying to call a top in a bullish market is absolutely a loser's game. So what I'm watching right now, this weekly inversion fair value gap, we're closing above it here. We see the bodies last 2 weeks respecting. That's exactly what we want to see. And then looking for Nasdaq, straight bullish price action, expanding higher. We had this weekly fair value gap here that the market's drawing to. Why this weekly fair value gap? Well, we can see the liquidity right here above this high. Oops, above this high here. But before that liquidity, we have what? This inefficiency, right? So remember, we were covering, if we're going to get up into these highs, the market has to show it to us and prove itself as bullish. And that would be by getting above this fair value gap here, treating it as an inversion gap, and then rocketing higher. So still, all eyes are on this fair value gap for me. Again, if we're going to be bullish, I need to see that right there, and that's going to confirm we're getting into the buy side. If we can't get above that weekly fair value gap, then of course buy side isn't even a consideration, right? So we've reached major targets. We're bullish all the way from down here, and absolutely nailing this thing to the wall, calling thousands of points in the Nasdaq. Working down into the daily chart, here we can see, we'll just go to S&P now so I can keep it refined here. So weekly fair value gap extended through the entire week. You'll see on Tuesday, or when we opened on Monday, since it was a bank holiday, Monday and Tuesday's candle merged into one. A little strange, but this is Tuesday's candle, but also Monday's action. So we're at the low of that weekly inversion fair value gap, and the market did what? Quickly displaced higher and traded outside that range. We then dropped down, used it as support, rallied higher, took out the high here, and then we pulled back down into the range. That was interesting last week watching that, because if we're going to get up into all these equal highs here and attack all this fun level buy side here, then we would want to see the market accelerate above this high, right? It's not ideal for bullish order flow to see the market trade above high and reject and pull back down into the range. Not to say it's not bullish anymore. I just didn't like to see that, right? Because if they're going to get up into these buy stops, I'd want to see us really make some speed above this high and quickly accelerate into these highs here. They did not do that though. They took it into the buy side, quickly slammed it lower, and now we're back inside this down close candle. So let me take off this weekly level. And then what I'll be watching going forward for S&P will be this bullish order block here. As long as you remain above this bullish order block, I'm bullish. If we lose the order block, that does change things for me structurally and with my analysis. This low here already took out sell stops, so that should be an intermediate term low prime to send the market higher. So that's what I'm watching here. Down close candle, want to see that support price, and everything is still bullish in my opinion. 4-hour chart, you can see the bullish order block, traded down into it, nice rejection. What I'm watching now is going to be this balanced price range here. So where this fair value gap went up, this fair value gap went down, this is going to be an absolutely critical level for us going forward. So have this extended through, and this is what I'm watching going into this week. You're going to know exactly how I'm getting my bias on Monday and Tuesday when I'm going to be trading. How we trade inside this balanced price range is going to be everything. If we get above it, support rally, that's extremely bullish, and then we're looking for the all-time highs. If we can't get above it and we break down, then that gives me totally different insight, and then I'll have to work with sell models looking for lower prices. So this key level is going to give me a great deal of insight into what we're going to do longer term. In summary, though, I'm not calling a top. I'm staying with the bullish bias. I've gotten burned in the past trying to call tops before I really knew what I was doing, and I've just learned it's a loser's game. Trade the underlying order flow, trade the direction. When it does shift its direction, it'll communicate that to you, and then you'll be able to just navigate that accordingly. All right, going over to Nasdaq. All right, let's go up to the weekly chart's good. All right, so I like this buy side here. I do like these equal highs. However, we have this weekly fair value gap to contend with before we can even consider these highs here. Not a big fan of how the bodies are starting to respect this gap and stay in the lower half. I would have liked to have seen a strong close. However, the market didn't do that, stayed below it, but still looking for higher prices as long as you remain above this weekly down close candle. So I want to see this weekly down close candle act as a bullish order block, and I do not want to see us trade down through that. So I want to see this down close candle act as support in the new week and send us higher. Also, do keep in mind that we are opening a new month. So we just closed the month of May. Hope you guys all close it out profitably and green and successful. But keep in mind that we are going into the new month of June. So what does that mean? A new monthly power of 3. So make sure you're monitoring that monthly opening price, and you're using that in relation to the draw on liquidity, looking at that opening price premium and discount. That'll give you a great deal of insight for what we're likely to see for the new monthly range. Dropping down into our daily chart here, I'm going to go ahead and take off this weekly gap here. So on the upside, we had this buy side here. If you guys recall, when we had the stream last week, and we were actually down here, right? So remember when we were doing analysis last week, this is Sunday's opening right here, and this is where we were at, and I was calling the market where to? Equal highs here, right? Why is that? When the market's bullish, they're going to engineer equal highs, drop it off those equal highs, right? Retail is going to see, oh, that's strong resistance, right? Or a double top. And then let's just put on market replay here. And then you can see what they do on the open at Sunday. Displacement higher, closing above this gap here and validating it as bearish, exactly what we wanted to see. And then you'll see that balanced price range actually supported price. Market drop down into it, partial entry into the fair value gap, and then just absolutely rockets into the relatively equal highs here that we were looking for last week. So what did I give you? Well, let me take that off here. What did I give you above the equal highs? So above the, let me take off market replay mode. I'm already feeling full furu mode with the market replay. All right, so daily chart here. So again, we're looking for the relatively equal highs here, right? That was the initial draw last week. And then what do we have above that? Inefficiency here, right? Why inefficiency? Well, again, we have the buy side here that I favor. However, what do we have to contend with before we even get to that? We have fair value gap here and here. So that was delivered really nicely last week. And then they just absolutely sunk it after trading into that level. So daily fair value gap traded up into, and then it's absolutely cratered this thing to the downside, back into this down close candle. So again, what I'm watching, same thing on S&P that I'm watching on Nasdaq. This down close candle, I want to see it act as a bullish order block. I like how we traded into it. We stayed in the upper half. That's really good. Now I want to see it shoot higher from there. I don't want to see it lose. I don't want to see the Nasdaq lose this down close candle, because that would not be bullish for me longer term. So down close candle, we traded into it, we're finding initial support. I need to see that continue going forward. If we lose this down close candle, then I'm looking at this inefficiency here, this imbalance here, and then from there we'll have to see how we trade at those levels, and we could really accelerate. But again, as of right now, sticking to buy models, looking for higher prices. Dropping down into the 4-hour chart here. Again, that daily bullish order block, nailed that, and then the market is rallying. So what I'm watching right now, and then Friday gave a really nice long setup for me in the morning session. Looking at the 4-hour chart here, we have a balanced price range here with this fair value gap. This busy city, the overlapping of these inefficiencies creates a balanced price range. So what I'll be watching going into this week again is how we trade inside that level. This is going to give me the bias, right? So if we trade up into it, again, sell off, that would be bearish, that would not be bullish. However, if we trade to it and through it, use it as support, rally higher, then that would allow me to continue trusting buy models. So all eyes on this balanced price range here, because again, it already took out buy side, and then we quickly broke down below it. Now, because the higher time frame is bullish, I'm not quick to jump to a conclusion that, okay, this is a shift in market structure, or actually a break in market structure, sell short, go lower, simply because I'm bullish monthly, weekly, daily chart. So again, it's very important for you guys to understand the hierarchy of price delivery and understanding that it's so easy to zoom into these 1-minute charts, these hourly charts, and think you're getting the entire picture. Whereas where that true clarity is going to come from is top down, right? Weekly, daily, monthly, and then refining into your lower time frames. That's how you avoid getting lost with patterns. I mean, I was covering this week where I don't remember the day. I believe, yeah, it was a bullish day looking for higher prices. And we're talking about on the 1-minute chart, how the market traded lower, took out a swing low. And we were talking about why in real time that's not a 2022 model short. And it's essentially comes down to understanding higher time frame. Where's that higher time frame going? Then looking for your patterns in line with that. But if you're just looking for random patterns on intraday time frames, it's not going to be as effective as you think it will. Because again, the patterns that work have narrative, have bias behind them, have a reason for why they're going to be successful. All right, so let me get into a few questions here. Covered everything I wanted to. I think I'll share a little bit on Bitcoin, but other than that, content with that. Got some other things to get to here today. Amy, as always, can you provide your outlook for gold, silver, and oil? Yeah, absolutely. Let's go take a look at those markets here. All right, so we got a new monthly candle here, opening for gold. Gold has absolutely been ripping, been keeping you guys on the right side of it the entire year. Telling you guys, keep trusting buy models. Again, markets at all-time highs. What do we always say? Calling tops is absolutely a loser's game. Not that there's no short setups, not that you can't trade against the higher time frame bias when it is bullish, but trying to call a top and think it's just going to crash is never a winning game plan. So keep trusting higher prices. And again, you can see that clearly on the monthly time frame. Working down into our weekly chart here, market retraced into this bullish order block here on the weekly chart, which is a lower time frame bullish breaker. Hit that, showed support. This candle here now becomes a propulsion block in my analysis. Down close candle here, order block, down close candle trades into it. This becomes our propulsion candle. So we need to see the market show feedback from this down close if we're going to remain bullish and continue working to all-time highs. Working down into our daily chart, we absolutely nailed it to the wall with this bullish breaker here, calling the turning point. Reason being is because we have a range low to range high. This offers a discount market that's important for smart money. Inside the bullish breaker, market's off to the races. So what I'm watching right now on the daily chart even further is going to be this imbalance here. Let's make that blue. So this imbalance here, I like how we traded down into it once, hit it twice, but look at where we turned on the dime, right from the upper 50%. So as long as you remain above the upper 50% of that, we continue bullish. I'm looking for higher prices going forward. And a lot of the uncertainty and the unrest in the Middle East and other parts of the world is causing the gold markets to absolutely rip. So that's the bias. That's what I'm looking for. Above this gap, we're looking for buy side here, and then blast off to further all-time highs. And do keep in mind, if things do kick off around the world or in the Middle East, we will see gold climb very, very quickly. Silver, let me take a look at silver. Have we left that shitty range for silver? We have not. I've got nothing to share for silver, Amy. I remember we were talking about silver last week, and hopefully you can see why this is not a market I'm willing to call and even trade. Because if I called market markets like this with market structure like that, it would look like absolute amateur hour because the market's just not going anywhere, and it's confirming that clear as day with sloppy market structure, overlapping price action, clear, difficult price action. So it's just not going anywhere. What I wait for in these conditions, so it's not just to say, well, we don't know what to do with this. I'm just simply waiting for a displacement. We just need to see the market leave that range. Let me see if I can go to another example here. Perfect. Yeah. So great example here where the market just goes into a nasty range bound consolidation, right? Don't try to kill yourself trying to trade this. Wait for it to displace. Displaces, gives a fair value gap, and now it's just easy trading. You can see clear order flow, clear PD arrays. It's easy to trade it once you wait for the expansion. So when it's consolidating, don't try to kill yourself in there trying to trade that. Wait for it to expand, and then that will give you the cleaner price action to work with. And that's essentially where we're at in here. So don't have much to add for silver. Same thing as last week, right? We're still watching this up close candle here, but nothing's changed for this market. Then last one, crude oil. And same thing in crude oil. I think all these markets are waiting for the shoe to drop in the other parts of the world. Dropping down to the daily chart, we still remain inside this range. So same thing for crude oil, really sloppy. Why? Because we have equal lows, equal highs, equal highs here, and we're just banging around inside the range, right? No clear market structure, no clear order flow, a lot of overlapping price action. Again, if I called markets like this, traded markets like this frequently, it would look like amateur hour. So I don't have anything to share for the time being until the market gives a cleaner displacement outside the range. And what I mean by that is, for example, look at a market like gold, right? How easy it is to call it. You know, when we were here, we called it to a discount of that range into the breaker, and then from there we were able to call it higher from there. It's easy to trade and call markets that are moving, but if they're not moving, I can't use any of my superpowers to make it go somewhere. So I have to, just like everybody else, wait for the market to show me something that I'm able to work with, and this is just not market structure, order flow, anything that I'm able to work with or make any use of. So hopefully answers your question, Amy, and hopefully we'll have some more excitement in the crude oil and silver markets going forward. James, on the 4-hour time frame, Friday's drop came back to 50% of the dealing range. Yes, sir. Yeah, good observation. Absolutely. Absolutely. Yes, sir. So you guys can see what this gentleman is referring to. We have the dealing range low, the dealing range high, dropping below equilibrium. And if the market's bullish, it will drop below equilibrium to accumulate and keep trading higher. And that's absolutely what I'm looking at as well. So we're on the same page, James. Yes, sir. Nikki, thoughts on tariff increase for steel and its effects? So in terms of the tariffs, that's a really tough game for me to predict. And it's a really good question. And the truth is, I'm just not smart enough to figure it out. The fundamental side changes so much, and especially with what's going on, you know, tariffs are on, tariffs are off. It's so difficult to get an actual read on what that is going to do and what that's going to mean for the markets and what that's going to do for the broader economy and just all those other ripple effects that those things have. So they do have an effect. However, one of the things that I do to reconcile that personally is with what we do in trading. The good thing is I'm able to get paid and I don't need to worry about any of that stuff. Because if I'm trying to decode what old Trump is saying, what Jerome Powell is saying on the interest rates when they're talking on the FOMC and in the press conference, in my opinion, I am not intelligent enough to figure that out. All the things that have to go into the fundamental analysis to really make sense of that is just on a whole nother level. And then even if you do figure it out or you get a little bit of clarity, then what do you even do with that information? That's what I've learned. So saying that to say, I enjoy great peace of mind doing what we do, which is we don't even care. We're just dropping down into our intraday timeframes after doing a higher time frame analysis. We get to the charts on Friday or Monday, and we just sort out the price action intraday, and it's going to tell us everything we need to know. So fundamentally for us as traders, for those that are making income from the markets, everything we need to know is in the charts. And a lot of the mainstream news, what's being talked about with tariffs, Trump, all these things going on, a lot of that is a lot of misdirection. So I've learned trying to figure that out has been a loser's game for me personally. So it's not something that I'm able to make a whole lot of sense of. Things that I don't know too much about, I won't talk about. If I know a lot about it, I will talk a lot about it. That's not something that I'm able to give too much insight on. But again, the way that I'm able to sleep well at night is, good thing I don't even need to worry about all that. What that old man Powell saying, what Trump saying, what they're doing with tariffs. All I know is we need to know what time of day is it, where's the liquidity they're going to gun for, wait for order flow to get in sync, and then we're absolutely banking on these price runs. Really nice price run that we were able to trade on Friday. And that just makes it easy for me because, like I said, there's a lot of other things to be considered, and it's difficult. It's difficult because when I first started, and actually to share some more insight on that, when I first started, I tried that. Like I tried making my investment decisions based off what Fed Chair Powell was saying, interest rates, fundamentals, and I absolutely got my ass handed to me, and it was not fun. So over time of learning, this is absolutely the way to go. Cuts through all the noise, gets you right to the heart of the matter, which is making money. LOL, sounds good. Yeah, good question, Nikki. Wish I had a better answer for you, but that's all I got. Eslam, can you look at Solana? Yeah, let's take a look at Solana. Well, first, before I get into Solana, let's look at Bitcoin. Let's look at the mommy. Let's go to weekly chart here. All right, so was discussing crypto with my man Leon here this weekend. Last question, what is Bitcoin? Yeah, Amy, get your question right now. Good timing. So yeah, for BTC, let me take this off here. So what has just happened in Bitcoin? We've just called a monster move. From where? From, whoops. If we look at the dealing range, from low to high, we dropped down into a discount. And then from that discount, we've worked up into a premium. So essentially internal range liquidity to external range liquidity. Dropping down further into the weekly chart, we can see that here. Market dropped down to a discount market, took out sell stops, energetic price run into buy side, smart money buying here, smart money selling above these highs here. So we saw the market absolutely rip into the buy side here. So now when we see that, and we covered that with the dollar. I want to go back to the dollar because this is a really important point. You guys remember when we were calling dollar lower the past few months and just absolutely beautiful price run into these equal lows here. But you guys remember what we said after that happened? Once we get major targets delivered like we're seeing here, what's it more likely for the market to do? Consolidate, because we've just seen a huge price run. And like we discussed, these big price runs, these huge swings in price, they take time to develop. So once we see targets delivered and the market reaches higher time frame objectives, the market is much more likely to do what? Consolidate and go sideways. So that gives us a huge advantage because when we see major targets delivered, now we can just get patient and we can just let the market reveal its hand and let it do whatever it's going to do. So the same thing for Bitcoin, right? We just saw a monster move into all-time highs. And if we look at the daily chart here, all the way from this daily fair value gap here, calling it higher into the all-time highs here. So once we've seen these major targets delivered like this, I become patient. I want to see what the market's doing. So what I was looking at here going into this week, let me get these annotations back on here. We had buy side all-time highs taken here. What's this? Retail Rick's trying to buy the breakout, right? They're trying to go long here. We're seeing a lot of strength. Look, we broke out above all-time highs, so it's a good time to buy it at the most expensive price. The market then breaks down through that high here. That's important. So the market trades above it, breaks back down through it, and then we trade it into this up close candle here. I was watching that. That's a bearish order block. We then respected it, and then this candle here is an inversion fair value gap. So I extended that through, and then we broke down below it. That's telling me the market is short-term bearish. So when we were up here, been calling it lower, just into these relatively equal lows here. So that's what I'm watching right now for BTC. As long as we remain below this little fair value gap here, and here, I'm looking for lower prices. So we can, again, trade higher, hit that, and then work down. But that's what I want to see right now. Then that will take us into a weekly fair value gap right here. So you can see that weekly gap. And now on the daily chart, you can see that right here. So what I'm looking for, as long as we remain below this imbalance here and this imbalance here, I'm looking for the market to work lower in the sell side, trade to that weekly fair value gap. Once we get there, I'll have to see how we trade there, simply because if we're going to be bullish, then it would be reasonable for the market to retrace and then keep shooting higher. However, if we trade through that weekly fair value gap, get below it, then our attention goes to this imbalance here. And then if we lose that one, then look out below. Bitcoin's probably going to 0. Not really, but that's what I'm watching. So right now, looking for a short-term discount to trade down into the sell side here in that weekly gap. Then how and when we trade there will give me a great deal of insight, right? Because then if we drop, leave the lower half open, and then we rocket higher, then that would be obviously a bullish confirmation. So that's what I'm watching right now with Bitcoin, because we just had major targets delivered, just taking it nice and easy, low-hanging fruit targets, which would be sell side here, and then that fair value gap. Then how and when we trade there again will give me a great deal of insight going forward. So that's what I'm looking at for BTC. Ethereum lagging well behind Bitcoin, and it's not looking bullish here. It's not strong. Relatively equal highs taken out, and then aggressively diving back down below that. That's not something you want to see for bullish continuation. So we have this low here. If we keep dropping and we take out this low, then my attention goes to this large inefficiency here, and then this breaker can be used for a target on the downside. So that's what I'm watching right now for cryptocurrency. And now to answer your question, Eslam Solana, they put a futures contract on Solana. Very interesting. Very interesting. Yeah, so same thing as Bitcoin. Solana looks weak. It traded higher here into its bearish breaker. This down close right here. Extend that through. That's your bearish breaker block. Look at the bodies. Look at how beautiful this is. It never gets old seeing the precision with the concepts we use. Never gets old. Breaker trades up into it. Bodies turning on a dime there. That's important. That's indicative. So that would be bearish. And the reason why, before going right into Solana, I want to look at Bitcoin, it's very similar to what we do with intermarket analysis, right? Before I go into Nasdaq, I want to look at dollar and I want to look at bonds, because that's going to give me a great deal of insight in terms of, are the markets risk on, risk off? And essentially using that intermarket relationship with Bitcoin, Ethereum, and the other cryptocurrencies. So saying that to say, bearish breaker, we traded up into it, bodies respecting that, that's bearish. And we have this little fair value gap here. It looks like we closed down below it. So if we lose this gap here, that would be bearish. And then I would look for this down close candle as a target. And then below that, we have sell side here and sell side here. And as long as you remain below that breaker, that would be bearish for Solana. Dropping down into the daily chart here. Yeah, nothing's bullish inside this market structure. Buy stops taken, rejected, shifted market structure here. So what I'm watching now on the daily is this fair value gap here. For us to remain bearish, I'd want to see us remain below that. And then that would take us down into these sell stops here. And that's easy scalp. And then, or not a scalp, little intraday trade there into that sell side. And then how and when we trade there will be important. If we keep selling off and we stay bearish, then we could look for a discount in this range, which is what I'm favoring. So below this fair value gap here, looking for discount market sell side and this here. And we'll have to see what we get next week, but that gives us the bias for the coming week. Amy, thank you for the awesome review. My absolute pleasure. Thanks for joining, Amy. Thanks for your great questions. Joe, hey Dylan, can you look at BBAI this week? Swing strong. Yeah, let's take a look at that. BB. Interesting market. Interesting market. Just going up to the higher time frame, get my bearings here. Never looked at this particular stock before. It kind of looks like a shit coin on the on the higher time frame with all the pumps and dumps. Pump and dump, pump and dump, pump and dump. That's interesting. All right. Let's drop down to the weekly chart, see if we can make any sense of this here. So sell side there taken, down close candle, traded into here, used as initial support. So right now we are seeing strength. Looking at this fair value gap here. Body staying below it. So we'd want to see strength through that fair value gap if we're going to be bullish for a long swing. Dropping down into the daily chart. Yeah, watch this fair value gap here. That'll be influential. See how we traded down into it using it as initial support. Body staying in the upper half. So as long as we remain above that fair value gap, that would be bullish. And then you could look for this high here. this fair value gap here, extend that through, that could give you another target, and then there's other imbalances you can use on the upside. So based off what I'm seeing right now, the market looks fairly decently bullish. As long as you remain above that fair value gap, then I would trust higher prices. Losing that daily gap would not bode well for higher prices. So that's the opinion there. Markets like these that are just really spotty, it's not as easy to analyze, but still able to make sense of it. And then if you go down in like your intraday time frames, you can use other things to confirm that as well. So yeah, not the cleanest market structure to work with. So I'm leaning bullish, but more neutral to bullish, Joe, just because the market structure on this, you can see it's not as easy to decipher. Like this here kind of looks like Chinese to me. Whereas when we go to a market that is really fluid, easy, Nasdaq, now we're talking, right? Now we're in English. And that's very similar to how I look at that market. Really spotty, difficult to analyze. But that's my opinion. If I was trading it, that's the key levels I'd be using to come to my conclusions. James, please leave a thumbs up for Dylan. Please do. Thank you very much. If you found this one insightful, leave a thumbs up on your way out. Helps us out greatly. Joe, thanks, Dylan. Enjoy the rest of your Sunday, brother. Will do. You do the same, man. Eslam, thanks, Dylan. Absolute pleasure. Yeah, the previous coins were great to me. Yeah. Absolutely. No, I mean, if you can get in early on the pumps, then nothing wrong with it. Nothing wrong with it. All right, folks. Well, that's going to be it for me here today. Talked about non-farm payroll protocols. What I'm looking at here, you guys can see what my trading layout looks like. That's top secret, so I need to. So yeah, nothing else here. Let me see, make sure I'm not missing anything. Yeah, we're good to go. All right, guys. Hope this was insightful. Great questions. Happy to be here with you guys here today. I will see you guys on the next one. Take care, stay safe, and have a lovely rest of your Sunday. See everyone.